How the rich multiply wealth. 7 bank secrets exposed. Ever wonder how the rich seem to multiply their wealth effortlessly? It's not magic, and it's definitely not luck. The truth is, they have access to hidden strategies that give them a serious edge. Today, I'm about to reveal 8 powerful secrets that banks use to help their wealthiest clients grow their fortunes. These are strategies most people never hear about, but can be life-changing if you start applying the principles behind them. So, if you're ready to break down the financial walls and start thinking like the rich, let's dive into the secrets banks don't want you to know. Secret 1: personalized wealth management. One of the first secrets is that high net worth individuals receive personalized wealth management services tailored specifically to maximize their financial growth and security. While most people get basic banking support, wealthy clients are assigned private advisors who create custom strategies based on their unique goals. These advisors analyze everything: investments, taxes, retirement plans, and even international diversification options. The result is a highly specialized financial plan that aligns perfectly with the client's current wealth and future objectives. With personalized wealth management, these clients are not simply following a standard approach. They have advisors who are proactively looking for opportunities to grow their wealth, minimize tax liabilities, and protect assets from market fluctuations. This exclusive access to financial expertise means that every decision is optimized for their unique situation, giving them a level of financial clarity and strategy most people never see. And this focused, individualized attention becomes one of the biggest advantages they have in keeping and growing their wealth. Secret 2: tax optimization services. Another secret banks provide to high net worth clients is tax optimization services. For the rich, tax efficiency is crucial, and banks offer a range of strategies designed to legally minimize their tax obligations. One of the most popular methods is the use of offshore accounts, which, if structured correctly, can help reduce tax liabilities by taking advantage of lower tax rates in certain jurisdictions. These offshore accounts allow wealthy clients to defer taxes, protect assets, and even benefit from foreign investments with minimal tax burdens. Banks also help clients structure their assets through tax-deferred accounts and investments that grow tax-free until they are withdrawn. Additionally, wealthy clients can leverage tax-efficient investment vehicles, such as certain types of trusts and real estate investments, to shield large portions of their wealth from high tax rates. These customized tax strategies ensure that a greater portion of their wealth stays within their control, allowing them to reinvest more and grow their fortune faster. Through these services, banks make it possible for the wealthy to protect and grow their wealth while keeping tax burdens to a minimum. Secret 3: access to private investment funds. Next, the wealthy have access to private investment funds that offer higher returns than typical investment vehicles. These include private equity funds, hedge funds, and other high-potential, high-entry investments. These funds are typically not advertised to the public and require substantial capital to participate. Hedge funds, for example, often demand minimum investments in the 6 or even 7 figures, making them exclusive to only the wealthiest clients. The key advantage of these private funds is the potential for outsized returns that are generally higher than what the average investor sees in mutual funds or stock indexes. Fund managers running these investments often employ advanced strategies like short selling, leverage, and derivatives that increase the likelihood of high gains. This access allows the wealthy to grow their money significantly faster, giving them financial leverage that most people simply don't have. Private investment funds are another powerful tool that banks use to keep the rich one step ahead in wealth accumulation. Secret 4: margin loans and asset leverage. A lesser known but powerful secret is the use of margin loans and asset leverage. Banks allow high net worth clients to borrow money against the value of their existing assets, like stocks, bonds, or real estate. This means that instead of liquidating their assets to access cash, they can simply use their portfolio as collateral for a loan. They then use this borrowed money to make further investments, essentially allowing their wealth to generate even more wealth without selling off anything they already own. The benefit of margin loans is that wealthy individuals can keep their investments growing, while also generating returns on new opportunities. This strategy of leveraging assets amplifies their financial power, helping them quickly scale their investments without incurring capital gains taxes from selling assets. Margin loans are often available at favorable interest rates for high net worth clients, adding another advantage to the mix. By borrowing against existing wealth, they can maximize growth while minimizing risks and tax burdens, allowing them to achieve exponential financial expansion. Secret 5: high return fixed deposits. High net worth clients also gain access to high return fixed deposits, exclusive high yield deposit accounts that banks don't typically offer to the average customer. Unlike regular fixed deposits with low interest returns, these high-yield accounts provide wealthy clients with a guaranteed, low-risk income stream at significantly better rates. They offer an easy way for the wealthy to generate reliable passive income without taking on unnecessary risk. These high-return deposits are structured with attractive terms to lock in wealthy clients and keep their capital within the bank. In return, these clients enjoy returns that outperform the average savings or checking account, often without the need for active management. This passive income stream is a safe but powerful way for the rich to keep their wealth growing over time. The beauty of these accounts lies in their simplicity. They don't require much effort but deliver solid, predictable returns that enhance their financial portfolio. Secret 6. Lower interest rates on loans. Banks provide lower interest rates on loans for high net worth individuals. This preferential treatment can apply to a wide range of loans, from business financing to real estate or investment loans. By securing lower interest rates, wealthy clients save on the cost of borrowing, which increases their profitability on new ventures and minimizes their overall financial expenses. This benefit allows the rich to take on large projects and investments with minimal financial strain, as they pay far less in interest than typical borrowers. Banks offer these favorable rates because they see these clients as low risk due to their existing assets and wealth. By borrowing at lower costs, the wealthy can invest in high return opportunities without losing a significant chunk of their profits to interest payments. Lower interest rates are yet another way banks give their wealthiest clients an edge, ensuring they can grow their wealth with minimal cost and maximum returns. Secret 7. Access to initial public offerings, IPOs. One of the hidden advantages the wealthy enjoy is early access to initial public offerings, IPOs. IPOs are when a private company goes public, allowing investors to buy shares before they're available to the general market. Banks often reserve allocations of these IPO shares for their most valued clients, giving them a rare chance to buy stock at the initial offering price. This early access is invaluable because when companies debut on the public market, their stock prices often surge, allowing early investors to make substantial profits right from the start. For the average investor, IPO shares are usually hard to come by. Public demand often drives the price up before most people even get the chance to buy, making it challenging to capture significant gains. However, wealthy clients have the advantage of buying in at the ground floor. This exclusive opportunity to profit from IPOs is another way banks help the rich grow their wealth rapidly while limiting market risk. By capturing these initial price gains, wealthy investors multiply their assets quickly, creating even more opportunities to expand their financial portfolios. Well, there you have it. By understanding these strategies, you can begin to adopt similar principles in your own journey toward financial success. Thanks for watching.